So maybe you or someone you know has had a Chapter 7 bankruptcy, and you're curious about when and how can you buy another home. And today, so we're going to run through this. My goal to show you today is how to get this done with a traditional mortgage. There are loan products out there that can do shorter wait periods after a bankruptcy. However, you're going to be required to put down massive amounts of down payment, and you're going to have a pretty brutal interest rate on there. So today we're talking conventional loans, Freddie, Fannie, FHA, VA, and USDA are traditional loans. My name's Miles Pitcher. I own Superior Lending, been in the business 23 years now. So let's jump into this. So pretty simple here is, what is the waiting period? And you'll notice that some of these refer to a discharge date. That is when the bankruptcy is been done, approved by the court, signed off, and they call it discharged. Okay, you'll notice on the FHA and VA, they have the shortest waiting periods after there's a discharge. Okay, I want you to remember this. This is a key thing. Let's say that you just hit, or you're coming up next month on your 2-year discharge date, and you go under contract on a new home that you want to buy. That's not going to work. They require you to go under contract 2 years and 1 day after your discharge. So just be aware of that. I had a client get caught in that, and they had to back out of the contract and then go back under contract on another home after they passed the 2-year mark on their discharge. You also notice on many of these that it says extenuating circumstances. What are those, and what benefit do they bring? We'll cover some of what those are. They've clearly defined what an extenuating circumstance is. And I want you to be aware that, like on FHA and VA, if there are extenuating circumstances, right, that 1-year mark, which is pretty short, they will require you to do a manual underwrite. And in other words, what does that mean? It means they're not going to go as high on how much they're loaning to you in the debt ratios, and they're most likely going to ask you to put down more down payment, especially on the FHA. VA is 100% loan. But just be aware of those. FHA is my favorite after bankruptcy for clients, because as long as you've kept your nose clean, you've improved your credit, you've made your payments on time, and you've improved that credit score, there's a good chance you're going to get the FHA loan. And you can do it with as little as 3.5% down. All right, let's look at these extenuating circumstances. We'll make this bigger. So you can see the check boxes like death of a significant wage earner. Maybe you had a spouse that passed away. Divorce, you can see that that's favorable to Freddie Mac, Fannie Mae, but not FHA, VA. Medical, on extended illness, everybody's cool with that. And then elective surgery for non-threatenings, you can see nobody is going to grant you an extenuating circumstance on that. Job loss, and they clarify job loss due to the borrower's poor performance deficiency. You can see nobody's going to accept that as an extenuating circumstance. And then inability to sell a home due to a job transfer. So that helps. If you fit these extenuating circumstances, I'm not going to go into it today, but they are very particular on what they want to document these. And I can help you figure out what those are in getting those put in. But the bottom line here is, other than waiting these 2 years, it is pretty easy to get back into a home after a Chapter 7 bankruptcy. Okay, we'll do another video on the Chapter 11, Chapter 13 bankruptcies, and we'll do one on short sales and foreclosures also. But today's just Chapter 7 bankruptcy. Please feel free to reach out and have my team help you if you have any questions on this, or if you need a quote on it. We love doing these loans for people who are just getting back into homes after Chapter 7 bankruptcies. Have a great day. Thanks for watching my video.